Good day, ladies and gentlemen. Welcome to the Dhampur Sugar Mills Limited Q1 FY23 earnings conference call. As a reminder, all participant lines will be in listen-only mode. There will be an opportunity for you to ask questions after the opening remarks by the management. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Naveen Agarwal, Head Institutional Equities at SKP Securities Limited. Thank you, and over to you, Mr. Agarwal.
Good afternoon, ladies and gentlemen. It's my pleasure to welcome you on behalf of Dhampur Sugar Mills Limited and SKP Securities to this financial results conference call. We have with us Mr. Gaurav Goyal, Managing Director, and his colleagues, Mr. Anand Pandey, CEO, Mr. Sushil Mehrotra, CFO, Mr. Vineet Gupta, AVP Finance, and Mr. Akshat Kapoor, AVP Finance. We'll have the opening remarks from Mr. Goyal, followed by a Q&A session. Thank you, and over to you, Mr. Goyal.
Thank you. A very warm welcome to all of you at Dhampur's Q1 FY23 earnings call. I will now ask our CFO to go over the key points of Q1 FY23. Over to you.
Thank you, sir. Ladies and gentlemen, a very warm welcome once again to our Q1 FY23 earnings call. First of all, I'd like to brief you about the current industry scenario as per the latest ISMA estimate of July 22. As a current estimate, the sugar production is 36 million tons, net of estimated sugar sacrifice of about 3.4 million tons in favor of the ethanol in current sugar season 21-22. The government allowed the export only through the permits and fixed the maximum quantity of 10 million tons for the entire season on 24th of May 22, and subsequently we expect approval of 1.2 million tons for the further export very shortly. The sugar exports have helped balance the entire sugar market, and as a result there are no upward or downward spikes in the sugar prices. The estimated sugar stock will be about 6.73 million tons at the end of sugar season as on 30th September 22, which is equivalent to about 3 months of the consumption of the country. 4.5 million tons of sugar production is expected to be diverted to ethanol from the cane juice and B-heavy molasses route in the sugar season 22-23 as compared to about 3.4 million tons estimated in the current sugar. Therefore, after accounting for the reduction of this 4.5 million tons in the sugar production through the cane juice and B-heavy molasses route, the sugar production in season 22-23 at around 35.5 million tons of the sugar and consumption would be around 27.5 million tons. Therefore, keeping a surplus of about 8 million tons, which will be available for the potential exports in the next season. Now, coming to the performance of the company, we had our board meeting to approve the Q1 FY23 results yesterday on 27th of July, and I am sure you have had the opportunity to go through our results. The company had crushed 7.18 lakh tons of sugar cane and produced 0.57 lakh tons of sugar in Q1 FY23 as against 7.89 lakh tons crushed in the previous year corresponding quarter and 0.88 lakh tons produced in the same quarter. And I am happy to inform that Dhampur plant crushed 244.29 lakh tons of cane in this season, which is highest ever crushed by the unit. Our recovery has been 7.93% net of sugar sacrifice for B-heavy and syrup diverted for the ethanol production. The gross recovery has been 12.65% in Q1 FY23. The sugar inventory is 1.39 lakh tons, including raw sugar of 0.04 lakh tons, valued at about 30,850 per ton. Sugar sales have been 1.22 lakh tons, including raw sugar of 0.31 lakh tons in Q1 FY23, and our average sugar realization in the quarter has been upwards of 34,520 per ton, and the raw sugar realization has been 33,470 per ton. The company produced ethanol from the sugar cane syrup as well, and 1.76 lakh tons of the cane was diverted to ethanol production from the syrup. The ethanol produced from syrup was 148.71 lakh liters, The company's proposed distillery expansion plan is progressing as envisaged earlier, and as informed in the last call, this will be a capacity of about 130 KL per day on C molasses, which will have a dual feed capacity of 100 KL per day on the grain. And post expansion, the total distillery capacity will stand at about 500 KL per day on B heavy, including 100 KL on the grain. The financial closure for the project has already been achieved. I'd now like to take you through the financial performance of the company for the quarter ended June 22. Our consolidated performance, the revenues have been about 828.9 crore, which is higher by 52.32% over the corresponding quarter last year. EBITDA has been 86.9 crore, higher by 23.3% over the corresponding quarter. The PBT is 557.4 crores, which is higher by 35.7% over the corresponding quarter. The profit after tax is at 39.3 crore, which is higher by 26.4% over the corresponding quarter. The cash profit is 60.3 crores as against 47.6 crore, which is again higher by 26.6%. Our standalone performance, the revenues from operations during the year stood at 819.5 crores, which is higher by 50.6% over the corresponding quarter. EBITDA is 83.3 crores, higher by 18.1% over the corresponding quarter. PBT is 53.8 crore, higher by 27.2%. Profit after tax, 35.7 crore, higher by 14.8%. And cash profit, 56.7 crores against 56.7 crore against 47.6 crore, which is again higher by 19.1% over the corresponding quarter. The company's performance improved mainly due to high sugar sales by 0.37 lakh tons, which is at 3.69 lakh quintals for the current quarter, and higher sugar realization from 32,479 in the previous year corresponding quarter to about 34,520 per ton in this quarter. Our current ratio now stands at 1.26 times, and long-term debt to equity is 0.25. Let me now take you through the business-wise performance. The standalone performance, our share of revenue from the sugar business is marginally higher at 56.4% as against 54.8% in the corresponding quarter last year. From power business, it is slightly lower, 4.5% versus 7.2% in the last year. Ethanol business is 14.8% versus 15.6% in Q1 FY22. Chemicals is 9.4% versus 9.7%, and potable spirits have again the higher revenue at 14.2% versus 11.8% in the corresponding quarter of the last year. Our share of profit from the sugar business in the current quarter is 32.2% against 8.8%. Power is 20.9% versus 23.6%. Ethanol is 32.8% versus 52.2%. Chemical is 13.4% versus 15.9%. Potable spirits have shown improvement by reduction of the segment loss. The company has made a repayment of long-term debt of about 10.2 crores in this quarter, and the long-term debt outstanding as of 30th June is 254 crores. So these are our financial numbers on the broad level. Thank you so much, and we'll be happy to answer any questions that you may have.
Thank you very much. We will
inform you better with numbers because surveys are still on as we speak.
Okay, noted. Thank you.
Thank you. The next question is from the line of Sanjeev Kumar Damani from SKD Consulting. Please go ahead.
Good evening. Am I audible, sir?
Yes, sir, you are.
Sir, congratulations for very good set of numbers and thanks for exhaustive presentation. But for the first time, I noted that you have not mentioned the valuation of the sugar inventory. Otherwise, in your presentation, you always mention the rate per kg as you assess the, for the closing stock on the quarter. So can I know the rate at which it is being valued on 30th June?
Sorry, I think that we missed that point. From Q2, we will make sure that is there. So our valuation of sugar stock as of 30th June is 30.85.
30.85. Thank you very much, sir. Now I want to learn from you that, sir, when we crush 1 ton of sugar cane, we get how much liters of syrup and how much liter of syrup, this 1 kg cane can make ethanol directly. So I know the percentage can vary on the yield basis, but can you give some rough estimate so that we can take it into our calculation?
So basically what you should assume is that in case the Poland cane or the total sugar what I would get is at 10%, the yield on ethanol out of syrup I will get is about 650 liters.
650 liters, right, sir? 650 liters, one ton of cane.
On 1 ton of cane basis, that in case sugar I would get at 10%. अगर चीनी मेरे को उससे मिलती 1 टन से मुझे मिलती 100 क्विंटल चीनी, तब उसमें जो अगर मैं डायरेक्ट एथेनॉल बनाऊंगा तो उसमें मुझे मिलनी चाहिए about 650 से 660 लीटर। तो अगर यही मेरी अगर हो जाएगी 12, तो वो उतनी बढ़ती रहेगी।
यदि 12% यील्ड हो गया तो
मेरा वो आ जाएगा क्लोज टू अबाउट 800 के आसपास।
800 के आसपास आ जाएगा। ओके सर। And in this case you are not deriving any sugar, sir. When you directly use syrup to make ethanol, you are not recovering any sugar from this syrup. When we say that we are, right?
एकदम right. Yeah, एकदम सही है।
अच्छा sir, secondly, in the closing stocks, you are not mentioning molasses as on date, the molasses that you hold, so that the valuation of molasses can be assessed. And secondly, we do not know exactly how much liters of ethanol you are still going to make in the next quarter and quarter thereafter. So because of the stock of the molasses, if you have sufficient, then you can run for 6 months. So can I get some more idea about it as to the closing?
But again, you have to realize that we don't have to run from 30th June for 6 months. We have to only run for 4 months, because after that my plant will start and the new naya shira hai, that will come back to us. So we have got sufficient stocks to run through the whole year.
Okay. So can I get, you have some closing stock of 12 lakh liters of ethanol right now as per the presentation. So how much more you are going to make, and will that be suffice to complete the obligation of last contract that we have taken with OMCs?
Yes, we have sufficient stocks to run our plant for the next 4 months till the time we start our next season. Meanwhile, we have a B-heavy molasses of 0.69 lakh tons in stock.
Okay. So how many more ethanol liters that we are going to make in this next 4 months? 12 lakh we have got already, sir. And how much more we will make up to September?
So from each quintal of molasses,
so we will do about 20, about 30.
2.1.
About 2.1 crore liters is what we will supply over the next 4 months.
Next 4 months, 2.1 crore will be net more supplied from 1st July onward.
Yes.
Thank you, sir. Acha, coming to the last question about potable spirits, you have inventory of 18,903 cases. So here also our obligation of supplying on based on our levy quota, is it over, or you are still going to supply more in next coming quarter after June?
So it will still be more, and it will be done even in the next 3 months also.
Achha. Then the entire levy which we were supposed to give to them will be fully utilized in this.
Sir, I hope so, sir.
Achha. Thank you, sir. Thank you very much.
Thank you.
Thank you.
The next question is from the line of Shailesh Kanani from Centrum Broking. Please go ahead.
Good afternoon, sir. Thanks for the opportunity. I had a couple of questions on international front. Recently, we have witnessed that raw sugar prices last at least 10 to 15 days have seen quite a lot of correction, in spite of Brazil production not looking that great. Can you throw some light on those figures and your view on the same?
Yeah, so we've also seen in the last about 10 to 12 days, we've seen New York really coming down, and that is a reason of two. So one is that crude prices have started to come down. That is why people believe that Brazil will start to produce more of sugar because crude being down. That is one of the reasons. Secondly, it has also been because India is seeing a very big crop for 22-23. So these are the two reasons why we have seen sugar prices globally dropping over the last about 10 days.
Okay. So when do you, just carrying on with the same question, when you say that we have seen a good crop for 22-23, what are the estimates or what are the market expectations on that front?
So see, as we all spoke about earlier, that about 7.5 to 8 million tons of sugar is what we believe will be in surplus in India in FY22-23, and that is a sort of quantity that India will have to export next year. So we are in touch. Even government is aware of all these numbers, and they are fully, so we are in dialogue. They have been very proactive, as you all know, for the last about 3 or 4 years, vis-a-vis exports, about blending. So we are very sure that they will come out with an answer as to how India will evacuate this 8 million tons next year.
Okay. So just drawing a picture, supposition that I think right now the rates are around 17 cents around, hovering around that level for the last couple of days. So that would not be remunerative either for landlocked players in UP or either on coastal region, right? Be it Maharashtra or Karnataka. So what other avenues do you think we have, just in case if the international prices don't improve from here on? What do you think means? What are the different avenues for reducing this 7-8 million tons, whatever the figure may be, going ahead of excess inventory?
Shailesh, we have seen this over the last about 3.5 years, right? Right now, it's still early days to say whether New York will go up or not when we start to export at that point of time. But as I said, if you see, apart from last year, when there was no subsidy given by government to us, the previous year to this, if we talk about 2021, they gave us 6,000 per ton to export, and the previous year prior to that, they offered us 8,300. So they are also very proactive in this, seeing what is the
rates for Q on Q. Any color you can throw on that? What is the outlook? How do you see prices shaping up in the domestic market?
So see, I've said it even earlier in my earlier calls. I believe the prices should stay pretty much stable. We are right now at about 34.5 to 35. I would see just about a $1 plus or minus. From here, I don't expect prices to drop down to 32, and I'm talking about North India as of now, not about West. So I expect prices to stay within that range of about 34 to 36 is the price range that I see for the next 3 to 4 months.
Okay, fair enough. So last question from my side. I believe in some regions we have already reached around 11% of blending. So how has been the outlook on, or how has been the offtake from the OMC side?
Very good. I think that the push that we have got from government and from OMCs has been very, very good. We are already speaking about taking it higher. As of now, as of 30th June, the average blending has been about 9.8 for India-wide, which is excellent. Certain states they have already allowed going to 11. Now we also were speaking about going to 12 next year because, as you know, that expansions are happening both on the side of the sugar side and also on grain. So to achieve 20 by 2025, this has to be a gradual increase which we have to do. I think that we are all geared up now to reach 20 by 2025.
Okay, fair enough. If I ask you a question, sir, what is the current ethanol production capacity India-wise, and how has it been for last year? Means how it has been the growth? You can just talk about the installed capacity.
So for FY21-22, ethanol has been at about 460 crore liters is what is for FY21-22. For 22-23, we expect it to go up to about 550 crore liters.
Okay. So that is what you're talking about blending, right?
Yeah, that is what will go to the OMC.
Yeah. My thing was that I wanted to know the installed capacity India-wise. What is the installed capacity of ethanol per se? And how is that shaping up? What kind of capacities are coming up in next say 1 year?
Currently, it is 450 crore liters. Next year, it will grow to 550 crore liters.
Okay.
Thank you.
Thank you. Participants, if you wish to ask any questions, please enter star and 1 on your phone. The next question is from the line of Pratiksha Daftari from Equitas Investment. Please go ahead.
Thank you for the opportunity. So my first question is regarding ethanol profitability. So we've seen some dip there. So just wanted to understand what is the transfer price for molasses this quarter vis-a-vis last quarter?
Could you please repeat the question?
Transfer price.
Okay. Transfer price for the feedstock, it's basically computed considering the market potential. And the last year, the price was about 800 rupees to a quintal. And this year, it is 1,350 rupees.
So would this be the key reason for profitability impact, or is there anything else?
Yes, you are right. This is the impact.
It is basically on transfer price where we actually see two things. The cost of cane and the price of sugar that we can get out of sugar itself. And on that basis, we will finalize transfer price.
Okay. Understood. And if you could just give the detail of the volumes exported during this quarter and average realization for export in this quarter. Sugar export.
We have exported about 32,000 tons in this quarter, and the realization has been about 33,470 rupees.
Sorry, 33,400?
470.
Okay. Thank you.
Thank you. The next question is from the line of Nimish Sheth from GT Advisory. Please go ahead.
Yeah, hi. Just a follow-up question. In your presentation in the last slide, cost trends, etc., you talk about growth focus, ethanol and chemicals. So on ethanol, yes, you've clearly specified everything, your expansion and all. What are your plans on the chemical side? Are there any plans that you wish to discuss or share with
yes,
us?
so still slightly early days. I'll be able to perhaps offer you a better light on that. But I think that the chemical side is one thing that we've been now studying for the last few months as to what next for Dhampur as a company. We have been doing basic chemicals for the last 20 years. But now, what next? So that is the plan, that how do we get into specialized or we don't. So that is a study that we all are doing as we speak. We all are hiring experts on that to try and help us if we really believe that that is the field that we want to go into. So specialized chemicals is one area that Dhampur wants to explore over the next 6 to 12 months. That is why, as you also know, that we've hired a new CEO whose expertise is on that side, and we hope that he'll help us plan the future for us on that front.
Okay. Thanks.
Thank you so much.
Thank you. Participants, if you wish to ask any questions, please enter star and 1. The next question is from the line of Tala Varun Reddy from SR Industries. Please go ahead.
Yeah. My question is, Dhampur Sugar Mills is divided into Dhampur Bioorganics and Dhampur Sugar Mills. So could I know when Dhampur Bio will be listed in the stock market, and what is the dividend that you didn't mention any dividend that you are going to provide to the investors?
So on Dhampur Bio, because it is separate company now, I can surely say that all papers have been filed with the stock exchanges, and we hope it is done shortly, but we cannot offer an exact time. But we are offering, but we do believe it can be. Why don't you tell us?
On the listing of Dhampur Bio, the in principle approval has been received from the stock exchanges. Now the request letter has been filed with the SEBI, and in the normal course, they would take anything up to 1 month. So it is expected by third week of August to get listed.
Okay, thank you. And what about the dividend that for the June quarter?
Are you talking about Dhampur Bio?
Yeah. No, Dhampur Sugar Mill.
No, so Q1, no. So we have no dividend that was proposed or approved by the board for dividend in Q1.
Okay, thanks.
Thank you.
Thank you. The next question is from the line of Ashram Mani, individual investor. Please go ahead.
Yeah, hi. Congratulations on a good set of numbers. I just had one question, a couple of questions. One is, wanted to understand what is the pricing for power. I see there's a small dip in the realization from 3.75 to 3.59 in the current quarter. And my second question is in terms of pricing of raw sugar in the international market. Wanted to understand what is the cost of production, if you would give me an idea of cost of production of raw sugar in Brazil vis-a-vis what the current pricing is. So if you could just throw some light on that.
Yeah, sure. Thank you. Power price is slightly lower because, as you know, that we have got 2 plants which supply power to the grid. Rajpura plant, the power rate there is 4.1 per unit, and in the Dhampur plant it is 3.1. Our Rajpura plant, because it shut slightly earlier than last year, that is why you have seen a slight dip in the overall price of power that we got for Q1. On the raw side, Brazil, the sugar price is half of ours. So that is why the costing is exactly half of ours. So our costing of raw comes to about 28 to 28.5 per kg. Brazil is at about 20 to 21. I'm talking about Indian. I'm talking about as per our own rates, not as per real.
Right. So, okay. So, yeah. So, if would you have a sense in real per terms, what would be the costing?
So, because see, Real has also fluctuated a lot, right? So, Real has depreciated a lot in the last about 2.5 years. So, I really don't have that exact number, but I can have it worked out for you.
Sure. Right. Thanks.
Thank you. Participants, if you wish to ask any questions, please enter star and 1. The next question is from the line of Rajya Santalia from Astralit Investments. Please go ahead.
Good evening, sir. Congratulations on the great set of numbers. I had a more broader conceptualized question on the industry.
Sorry, but I can't hear you very clearly. I can't hear you.
So if you're wearing earphones, we would request you to speak directly from the handset mode.
Now?
Yeah, it's better now.
So congratulations on a good set of numbers, sir. My question is more on the industry side and with respect to the recent order from the government on capping exports. My question is, considering how much ethanol is being diverted, how much of our sugar production is being diverted towards ethanol, and this was said a few years ago also that sugar production on a yearly basis is going to massively decrease, and the overproduction in the carrying inventory is going to eventually decrease to your buffer stock level. Every company or the industry as a whole should carry. So, although this 10 million tons was anticipated as a non-event, can we still see that theme playing out where eventually in 2-3 years the industry won't have enough sugar to export, and whether it's banned or not banned, and we will only be left with our buffer stock for the next 4 or 5 months till our plant doesn't start?
Fair point. See, again, but we have to realize one thing. The government banned exports only after India exported 10 million tons. Prior to that, it was under OGL exports were happening. Government had a slight sort of an issue that India shouldn't fall short of sugar for next year. They got convinced, and that is why they are now they all are now saying that yes, about 1 to 1.2 million tons of further exports can happen. I for surely believe that India, vis-a-vis our sugarcane, vis-a-vis the excellent monsoons that we are seeing all over here, we have a great crop even for FY22-23. 3.4 million tons was diverted. This year, we should improve to, we should go up to about 4.5 million tons next year. Even if we reach 20, almost close to about, we all do believe that diversion which will take place will be almost close to 10 to 12 million tons. And once we get that done, and assuming that the cane crop will not be higher, India will be self-sufficient, where we will not need to export too much even after 3 years.
And not exporting too much will not make a difference to the companies operating.
Yeah, exactly. See, so once the basic reason that India exports or is exporting is because we don't have any other revenue as on date. Once the ethanol capacities go up, we can divert more and more sugarcane into that area, and that much of lower export is what India will then need to do for years to come.
Sir, thank you for your answer, sir. I have 2 more very quick questions. One is, there was rumors about the government trying to try ethanol within aviation fuel, shipping. Is there any truth to these rumors, sir? And can we see that happening in the future?
Yeah, so, globally it has already started to happen. India is also doing their own trials, but as of now, that is slightly far ahead in the future because we need, first of all, blending for our 2-wheelers and for our 4-wheelers. But yes, aviation fuel, shipping fuel, the world over is being tried upon, and I do believe there is a success story which has started happening there. Obviously, India will also take up to that challenge as soon as we have that much of capacity in place.
Okay. And sir, my last question is on the ethanol production front. When we reach can you see India with the whole crude oil and our dependence on crude oil and that the crude oil imports affecting the route, have you seen a drastic change in the mindset of the government in terms of increasing the focus on renewable sources of energy like ethanol, or there has been no impact whatsoever?
No, I think there has been a huge impact. I think that the government, what we are talking about, blending in 2 years back, we did about 200 crore liters. We have already touched 450. Next year, we are talking about 550. We are talking about close to 1.3 billion liters in the next 3 years. I think that we are on the right track, totally on the right track. We have also now started to talk about flexi fuel. So why stop at E20? Why not go up to E100 or E85? So FFEs
that was my next question.
Dialogue. So FFEs are already there. We've had meetings with the auto guys. By FY24, FFEs will start to come into India also. So by 1st April 2023, all two-wheelers will be ready to blend up to 20%. FFE, as far as what my understanding is from the auto guys, is that they will start to supply FFEs from FY24-25.
So an FFE is classified over 20%, if I'm not mistaken?
Yeah, so FFEs are classified as of now in India, it is classified up to 85%.
Okay.
But we are also now speaking to them why to stop at 85, why not do FFEs up to 100. But as of now, the current rule in India is FFEs are up to 85.
And so most of your cars can accommodate flex fuel?
So only the new ones. The new ones which will start to come up from, as I said, from 24-25, they can do up to 85. Vehicles which will start to come from 1st April 2023, they'll be fully compliant for blending up to 20.
And so going ahead, let's say, just an example, if we target 50% blending by, say, 2030 at about 1,500 crore liters, and how much percentage do you see of that 50% blending coming from sugar vis-a-vis grains?
Again, see, extremely hard to answer right now, but India, sugar mills have capacity to do as much, but we have to also see that we have sufficient amount of sugar. So it will always be a balance with which will happen year on year. That is why even our own expansion that we all are doing, we are also putting up a grain-based plant just in case India needs more sugar. Our ethanol plant won't shut and we will divert 100 KL to grain. So I think everyone will try and do that.
But so isn't the whole process of the grain-based production of ethanol versus sugarcane, using sugarcane, isn't sugarcane way more profitable for you for the sugar maker?
That is an option that sugar mills will have. So that is a great option. So you see, you have a hedge. In case you see sugar cane being lower, you can go to grain. If you see cane being higher, stick to cane. So this is an optional it's an optional hedge that sugar mills will always have.
And so my last question is, can we assume that the majority will be from sugarcane and not grains?
For sugar mills, it will always be from cane. For the grain guys, obviously, they all have no option but to do from grain only.
Correct. No, but my question is, let's say 1,500 crore liters, let the government says in 2030 we'll need 1,500 crore liters of ethanol. Can we assume that 60% at a minimum level, of course it's very hard to assume, will be from sugarcane based ethanol and the others can be grain based, or would you say the balance would be more 50-50?
I would see, again, very hard to say as of now. Take any number you like. It can be in that range. 50 to 60 will come from sugarcane. Balance will be out of the grain.
Okay. Thank you so much, sir. Thank you so much.
Thank you.
Thank you.
The next question is from the line of Sanjeev Kumar Damani from SKD Consulting. Please go ahead.
Namaskar, Goyal Sahab. This is just to acknowledge that you have been very, very kind, and we are thankful to you for getting our answers. And sir, I salute you for your excellency, and I wish you all the best. And in your leadership, Dhampur will grow, reach very big heights. This is what I wish. Thank you, sir.
Thank you so much for your kind word. But ये सब आपका प्यार है जो आपने ये बोला है. But thank you, sir.
Thank you, sir.
Thank you. The next question is from the line of Udit Gupta, individual investor. Please go ahead.
Good afternoon, sir. So my question is that what is the processing cost of ethanol per liter, sir?
Excuse me, what is
the processing cost of ethanol per liter?
It comes about $7.
So does that include transportation cost?
Transport is, I mean, that is, this is, I'm speaking about COP. So my COP, if I don't take my feedstock into it, then it is about 7 per liter is my, yeah.
And so like the cost that we have to incur to send the ethanol to the OMC, is that separate over this?
Yeah, so transport, they all pay us. But if we go to certain areas which are slightly far or slightly closer, there I might lose about 30 to 80 paisa, depending, or I may gain 10 paisa. But that is it, not too high.
Okay. It's not a big figure, I guess.
No.
And sir, you're saying that the expansion of distillery will be complete by January 2023?
G.
Sir, how many liters are we expected to produce after the expansion is complete? So is it about 12 crore liters?
So we are right now at 250 KL on C. We will go up to 380, and on B heavy and on syrup we'll be around close to about 500. So assuming that we get about 10 months for the full, we will do 15 crores less 20%. About 15 crores, about 14 to 15 crores is what we expect to sell to the OMCs in in the whole year of 23.
Okay. No, so I was talking about like FY24 if you take, so like when the entire production is in.
So FY24 you can expand it by about 1.5 crore more. So about 16 crores is what we will do for the whole year of 24.
Okay. And sir, this excludes our levy, molasses and all that. So this is like the
so that is over and above that.
Okay. Thank you so much. Thank you.
Sorry.
Yeah.
Udit, I just want to answer that once more. So it is 500 into 300, 16. Yeah, so 16 crores that I said, I'm so sorry, it includes levy also. So levy would be minused out of this.
Okay. So it would be roughly how much, sir?
So see, as of now, levy is at 18. So our export will be about 14 and 2 will go for levy.
Okay. So 14 to OMC and 2 for levy.
1 to 1.52. So, again, levy rates are changing every day. Right now we are at 18. Last year we were at 12. Next year they are talking to have it even higher. So I'm just offering you a ballpark.
Yes, sir. Ballpark is about 14 plus 2.
Haji.
Okay. Thank you so much.
Thank you. The next question is from the line of Nimish Sheth from GT Advisory. Please go ahead.
Yeah. Hi, sir. Sorry. You gave us an answer of the long-term debt as on 30th June 2022. That's 254 crores. How much of this is the debt that's under subvention? I mean, the lower interest debt. Most of it, some.
I think so. Largely, this is under the subvention because it's all based for the project. But some debt which we had raised last year is in the range of about 6% to 7.3%. So that adds up to somewhere around 150 crores. So that is outside of this, and the balance is all under subvention.
And the new loan of 120 that we are taking right now, that will be also under the subvention.
Okay. Thank you, sir. Thank you.
Thank
all
you.
the best. Thank you.
Thank you. The next question is from the line of Shailesh Kanani from Centrum Broking. Please go ahead.
Thanks a lot for the opportunity again, sir. Just continuing with the question, the answer you replied, our production facility or getting delayed by 2 months because of commodity prices. Can you just elaborate? I didn't understand that. How the prices have impacted the delay? Can you please elaborate on that?
The prices didn't impact us. So even though capex was finalized earlier, but as you know that during the month of March, April, May, the steel prices went through the roof, and that is where the suppliers sort of had lots of issues to procure steel. And most of our own input cost for our capex is mainly steel, whether it is stainless or mild steel. These are the two main components. So because of that, they were not able to get the steel, and that is why our project got late by about a month to a month and a half.
Okay. And just to understand further on this, these are fixed price contracts. These are fixed price?
Yeah. So ours are all fixed price, but we have to appreciate practical, right? That in case a person who you place an order to, if his own cost goes up by almost 30 to 40 percent, he will always come back to us for a higher price. So we were all in that wait and watch mode. So that is why we have to be fair on both the sides. The prices of steel went up just too high. I mean, if it's a small gap here or there, we all can handle it.
Yeah. Can we just know the involved parties, who are the suppliers for this facility for us?
Yeah, so ethanol expansion is happening from this firm in Pune called Excel, and our boiler is from ISJEC, turbine is from Siemens.
Okay. Best of luck, sir.
Thank you so much.
Thank you. That was the last question. As there are no further questions, I would now like to hand the conference over to Mr. Goel for closing remarks.
Thank you, ladies and gentlemen, once again for joining our call. We appreciate all your support and interest in our results, and we look forward to meet you again around the next quarter. Thank you so much.
Thank you very much. On behalf of SKP Securities Limited, that concludes this conference. Thank you for joining us, and you may disconnect your line.